What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets, and I'm here today with a very special guest, Eric Crown. He is the founder of Crown's Crypto Cave, a very, very popular channel on YouTube. He's also a pretty prolific crypto trader. So, Eric, man, thank you for being here. Welcome.
Hey, man, my pleasure. It's good to meet you, Mr. Scott, and it's absolutely amazing to do this with you right now.
I love being called Mr. Scott. That's like reminds me of like my 6-year-old's friends. Hey, Mr. Scott.
Also go with Scott, sir, as well.
Scott, sir. Scott, sir. That's a more crypto way to say it. Excuse me, sir. Scott, sir. Yes, absolutely. So listen, why don't you give your very, very quick background here? I gave the superficial bullet points, but I'm sure there's a lot more to it.
Yeah, quick little background here. So I started getting into trading at a very young age, actually. My father was a trader on the Pacific Stock Exchange. So I used to go down and clerk for him whenever I was, a kid from, basically the age of 11 to college times. After that, made a few friends down there. And once I kind of decided I was done with college, I hit up a few of our family friends who were still down trading in the West Coast area, and one of the ones that I was in contact with was a guy who is on now what's known as New York Stock Exchange ARCA as a market maker in equity options. So I basically harassed him to, kind of take me under his wing and teach me the old system and everything. And so he did. I kind of evolved from there, met a few of the guys on the floor, and then I essentially found what I kind of consider my own mentor, who basically allowed me to trade with him. I got my Series 56, became a market maker authorized trader, and then spent a few years there before learning about cryptocurrency and figuring out that there's a ton of opportunity here and a lot more freedom as well.
So you've been watching this market for quite a while. It's probably a great segue to talk about what's happening at the moment. Now, we've obviously seen the major drop from 65K to 30K-ish. A lot of people are calling that a bear market. A lot of people are saying healthy correction, and there's a lot of conjecture as to what comes next. So I would just love sort of your broad strokes on what you think is happening right now with the market.
Yeah, it's a pretty interesting thing. So, whether you call it a bull or bear market, I think is kind of nonsense. You can't just say that a 50% move to the downside is like, oh, I hold that because it's a bull market. And, if you also have to trade that. Now, I wouldn't necessarily call it a bear market as well, just because we haven't really seen a whole hell of a lot in the last 2 to 3 months now. It's just been more or less ranging, and there's been a lot of opportunity within that range. But until we get a few things that I'm looking for, I really would not be, deciding one way or another. I think that there's definitely some really good cases for a bear market, actually, after a bit of an extension of this rally. And I think that there's also potential for continuation here as well, which we can get into if you so desire.
I'd love to hear both of those cases. Give me the bear case first.
Okay, the bear case. All right, so I need to go to screen share here. Let me pull up this right here. I suspect that you can see my screen now.
Yes, I can.
Okay, excellent. All right, so cases for a bear market. Well, there are plenty right now. And the biggest one for me is mostly the weekly trend right here. We did see that the weekly trend did reverse officially as of, I would actually consider as of right around here. We did get our lower low. And more importantly with that, this market's going to take its time. But anytime that we have seen a weekly reversal in this asset, whether it be to the upside or the downside, those have actually been all of the switch ups from bull to bear, actually. It's not the most sexy way of trading, but, trend does get the job done, and the trend is your friend. And as you can see throughout the history of time, it's been pretty much impeccable for this asset. So that would be probably my biggest one for that. But in this past week, I think that the bull case has actually been strengthened quite a fair bit. The reason why I do think that, if I go back on over here, is due to a few things, actually. First and foremost, we do see on our accumulation distribution indicator over here, which is going to be on the monthly specifically, we actually did get a positive slope throughout throughout this month as it did start to trade around. On top of that, if we're looking at on-chain metrics, I'm going to go over here to the Crown Chain application. It's actually a 100% free resource. Anyone can pick this up. We have a whole bunch of quant data that we put out there. And we see that on the global exchanges net flows, we've actually seen a few days now of big outflows from exchanges, which is, presumably people probably hodling. Now, this data actually does account for like exchange. It's all verified, so we can stand by what we say here in the sense that this is definitely not just just an exchange kind of shuffling from wallet to wallet.
Right.
And on top of that, we do see a few other things as well, especially, where was I going to go with this one? Do I want to see it over here? Yeah, this is what I'd say is probably the biggest one for the bull case right now as well. And I'm going to take off everything for right now. Actually, here we go. Here we go. Okay, so we have about what? Oh, actually, we should probably take off this as well. There we go. And there we go. Okay, so we have about 1, 2, 3 cycles thus far in cryptocurrency land, and they all have a pretty nice rhyme with the way that they've worked from Fibonacci extension standpoint, actually. If I put on my drawing tools right here, I'll bring you back to 2014, 2015. You can see that if we take a Fibonacci extension from the high of 2013 to the low of 2014, 2015, Bitcoin did get its initial breakout above the past prior weekly high. And where does it base off after that? It bases off right between the 1.272 and the 1.414 right here. That is extremely similar to what we saw actually in the prior cycle before that, right here in 2011 to 2012. And same thing, Bitcoin breaks out on the weekly, and where does it base off on that next major downside move? Actually, this one would kind of be your double bubble sort of opportunity that we potentially are maybe seeing on this market as well. And it was right there, right between the 1.272 and the 1.414. And then same thing over here, right from the genesis, taking this one from 2010 actually all the way up to our highs in 2011. And where does the 272 come in around? Basically our 2011 lows on this cycle right here. And all of these were just, major, massive downside moves. I mean, we're talking about 90% plus in some cases here. But what's more important right now is that while Bitcoin has been, on a 50% tear to the downside, where we based out at thus far, we've actually based out at the 1.272. So there are a few other things, of course, as well, mostly fundamentally speaking from the, from the stock to flow in this case here, we do see that we are once again green, which I don't know how much I trust this, but hey, it makes me feel good. So that's what matters most. And that would suggest anytime that we have seen it officially, freshly turn green, while Bitcoin typically does enter into a bit of a correction phase, similar to what we saw right here and right here as well, it has actually printed new all-time highs significantly, as that does progress. So that's probably the best that I can do for bulls right now. Actually, there's one more thing as well. And then I actually want to kind of bring it back to the bear case. I know you wanted to hear the bear first, but
that's great.
It's all going to make sense at the end of the day. Anyways, if we put on the Bitcoin log curve zones, you can see that Bitcoin actually did dip down and find its support on the green zone right here, which typically is your bull market, last major buy opportunity before, trending into the red. Now, the red is admittedly deep. I wouldn't say deep, but it is within the $100,000 territory right there. And so that could be a potential target, if this market is going to continue onwards and forwards, maybe over the next, half year to a year, whatever it ends up being. I'm certainly open to all possibilities there. Now, on the other side, though, there are a lot of concerning things, of course, if we're going to go with the pi cycle, which I know that, a lot of people have a lot to say about this, but so far it's been working pretty damn well. And we're going to line this up with something else as well. But anytime that we've seen this get a bearish cross, back here in 2017, 2018, back here in 2014, and of course, 2013 as well, no other iterations other than that. It's been pretty damn consistent with getting, these pretty nasty drop downs. I mean, that one from close about 65 to 70%. This one over here, about 80%. This one over here, thus far, actually 83%. And then this one, thus far, we have about a 50% drop down. Now, what's concerning me right here, what's concerning me with this whole price action is that we have an extremely similar setup to pretty much all bull traps throughout all of these macro cycles that we've seen thus far. Now, I'll also offer up what I'd be looking for in order to confirm that this is not going to happen. But for right now, I mean, this actually is kind of my general disposition, I do suppose. Anyways, so if we bring on this indicator right here, this is actually an indicator that we just had made. It's a pretty simple indicator, although it has a nice and fancy name, but basically it's just showing the ratio that a user specified moving average is away from current price action. So in this case, I am using the 20-cent moving average. We're looking at, we don't even need to talk about the look back, but we're on a weekly time frame. And basically, anytime that we have gotten that pi signal for the tops, the first move down where we get this just below the 0.7 read right here in flash green, well, those have all been, well, I'll just show you the results actually. But we see this first one right here. We get a nice bull trap in February, March of 2018. Not good. We get this one over here, of course, same thing as well. And then we actually don't get the exact same one over here, but pretty damn close, as that was relatively, young in Bitcoin's history. I'll bring you another couple ones as well, which are a little bit more damning in my opinion. That would be the bi-weekly MACD over here. The biweekly MACD, oh, actually, no, we do need that up. The biweekly MACD has only crossed to the downside about 3 times in Bitcoin's history, actually. But all 3 times have been pretty much the same result. And we see an extremely similar setup to right now as well. This one happening, or the last one happening back in October 2019. Bitcoin based off the white 20 simple moving average right here, bounces up, cross happens. We reject and see essentially a bull trap right at the cyan 9 exponential moving average, comes down to the 55 and breaks lower over time. Same thing on this one right over here, actually, February 2018. This one happening very famously, coming down to the 20 simple, crosses, bounces up above the 9, rejection, down to the 55, and lower over time. And then the only other iteration other than that is actually right on over here. Same thing, crosses the downside right here, bounce on the 20 simple, back above the 9, rejection, down to the 55, and low over time. And what are we doing right now? I mean, we're having a pretty epic bounce, no doubt about that, and definitely have to keep an open mind as a trader. No doubt about that as well. But as of right now, this bounce is just barely getting above the 9, and we do have several other points of confluence that show plenty of signs for caution, I'd say, in the mid to deep $40,000 territory. I'm going to bring you over to CME's chart right here. We don't need any indicators for this one. Quite simply put, Bitcoin's got a nice big gap down that we saw from our May drop at about 47,000 bucks right here. Also in line with the bearish retracement, which is right in line with the 618 and actually between there and the 0.5, kind of like your traditional sort of bull trappy areas. So while Bitcoin very likely does continue onwards and upwards from here, I think whether you're bullish or bearish, you're probably looking for a pullback from this region. If you're bearish, you probably look for, Bitcoin bases a few times. Where's my brush? Does something like this, bounce, break. And if you're bullish, you're probably looking for something like this, where we put in a higher low somewhere around like 35 or 36, something like that is probably what I'd be looking for. And so that brings up the question, what are you looking for on a macro low? Well, if you're just looking at price action, I'd say if you close a daily or weekly above 50,000 bucks, that'd look pretty damn good. Kind of hard to be bearish off that. But if we're going off of like a fundamental perspective, there is one big thing, or actually 3 big things I'd be looking for. Whoops, wrong chart. Let's go to this one over here. Okay, yes, there we go. The biggest one for me would actually be the hash ribbons indicator right here, which I've marked off all of the blue buy signals. There's basically 2 components of it. There's capitulation and then a buy. And it's pretty self-explanatory. It's a terrible timer. Just if you're going to use this indicator, I would not just blindly trust it, but there is a very specific interplay with it. First and foremost, in the whole history of Bitcoin, oops, let me just line it up like that. There we go. In the whole 11 or 12-year history of Bitcoin, after first getting the capitulation signal, which, by the way, we did certainly get when Bitcoin was somewhere around 50, 60,000 bucks in April, we have never, ever, ever, not even once, seen new all-time highs on Bitcoin without having a blue buy signal printed after that capitulation signal. So to put it one step further, and we're very far away right now. And of course, there is some fundamental reasons for that, the China news and everything, but there's always been fundamental reasons for this indicator. I've heard it ever since I joined this market, 4 or 5 years back now. Now, the next thing that I'd probably bring up though, is that if we do get that blue buy signal, well, does that entertain the possibilities of a potential macro low? Yeah, absolutely. Actually, in fact, all 10 out of 11 of these iterations that have happened have all indicated that once you get the blue buy signal, the prior daily low, that was a higher low, obviously, it's going to be an uptrend. The prior daily low was the low never to be seen ever again. The only time where that did not work was actually coronavirus dump times over here. And admittedly, we did actually have like about a 50% move to the upside before that dump happened. So pretty damn dependable. There's definitely some counterpoints to that as well. But realistically, that very likely lets me know that if this is going to turn out to be bullish, there's no real rush into position right now. It's probably going to take its time, probably over the next month or 2, most of summer. And you're probably going to get another chance, I would suspect in the mid $30,000 territory. If you want to be bearish, then, well, you got trend on your side and you're basically looking for a lower high to be confirmed anywhere below 50,000 bucks is fair game for that. And then of course, if you're looking for other few, pieces of confirmation for that as a macro low, you want to see that signal. Plus, just an uptrend on the daily would be good. We actually don't have that just yet, although we do have a higher high for the first time in a while. So that is good, but I'd like to see a higher low as well. It looks like we probably will do that right here. And then also I'd want to see that both of those whilst also seeing expanding volatility. So I use the BBWP indicator for this. It's one of our in-house ones. It's nice and free on TradingView as well. And right now we actually are getting pretty damn expanded right here. This is represented, by the way, in percentile format. So we're at about an 87.5% percentile read right now. But realistically, I'd want to see this like freshly expanding above about 50 percentile alongside the other two signals. And then I'd feel pretty damn confident calling a macro low. So there's definitely possibilities both ways. Absolutely. And that's why everyone hates technical analysis, but that is, the name of the game. I mean, anything can happen. Black swan events are non-zero probability. So it is wise to prepare for both and have your sort of criteria set. So as of right now, I mean, I do suspect that Bitcoin has more medium-term upside here. Yes. But over the period of time, maybe over the next month or two, I do suspect that we're probably going to find out whether or not this is going to hold true by September, the end of the quarter.
So I'm curious then, for you as a trader, you obviously have parsed a ton of analysis here. You've looked very deeply on multiple indicators. What's going to cause you to either get long or get short, or are you already long or short at this point?
Oh, as a trader, I'm already long. I don't really trade high-term timeframes. I basically have basically I just take my profits in Bitcoin that I make, assuming that I make some, and then I put them in a ledger and I don't really touch it. I don't really have any need for liquid cash right now. So I haven't had to go back to the bank since 2017, 2018, mid 2018, actually. So that for me is not really a topic of consideration. I longed the move back on the bull trap confirmation back above about $30,000 and have mostly been holding it right here. I am going to take some profit probably today, at least take some up because it's stalling a little bit. But overall, if I was looking for that long-term trade, I still don't think, I think that if you miss this move right here, you really don't want to chase this right now. Maybe you have another 5,000, maybe $10,000 on top of that. Definitely possible. But, I think you kind of miss the easy trade. If you're looking for the easy trade right here, you wait for the next one is probably what I'd be doing.
Yeah. I mean, we're talking on Thursday, July 29th, and, we've had the largest string of daily green candles of the entire year straight into resistance. So yeah. I mean, it's definitely hard to be eagerly jumping into a long at this point, whether it's going to go up or not. I agree. And this is, 40, 42, 43. It's the range highs of this entire move down. It's the all-time high after the move from 20. There's a lot of resistance here. You
kind of have to sell this area, at least on the first pass. It's
right. I mean, the easiest trade for the last 3 months has basically been long the range lows, long anything around 30 and short anything around 40 and wait. Right. So if it ain't broke, I guess don't try to fix it. Take your small loss if it actually goes the other way. So what I'm hearing, interestingly, though, is, we're obviously talking as traders right now, what you would do for a confirmation. There could be a bear market, all the definitions of these things. But it sounds like you have conviction that long term, this is going way higher. You're not cashing out. You're moving it to a ledger. So this is all semantics as an investor, I would imagine.
Yeah, you can definitely say that. I mean, I do have a conviction that anything that gives people more autonomous control over their lives is usually a good thing. And Bitcoin, gives you financial control or autonomous control over your financial life, which I look at as a very good thing. And, I don't necessarily subscribe to the beliefs that Bitcoin is going to replace the dollar or anything like that. I think that's kind of silly. But I think that Bitcoin can very easily, or maybe not easily, but it can certainly fit within the current structure. And hopefully, in the idealistic world, we take the good things that go along with Bitcoin and we take the good things that go along with the current traditional structure, discard some of the bad things and come together for a better whole. And, I think that this is probably going to be a very long form process, not happening anytime soon. I mean, maybe in the next 10, 20, 30 years, something like that. But all of this talk of $1 million Bitcoin this year and stuff like that, I don't know if I necessarily subscribe to that belief as well. Nor do you need to. I mean, just having
20 years, 10 years, 1 year,
right?
Ever 900,000.
Unless you're 80, it's not a big deal.
Right. But which leads me to sort of the next topic. I know on your channel, you talk about trading psychology a lot, the emotions that surround trading and investing. And we all know, there's no lack of of quotes from famous investors, like Warren Buffett. The market is a mechanism for transferring wealth from the impatient to the patient, things like that. So why do you think emotionally that it's so difficult for people to be successful as investors and traders? And why do you think they need to hear these $1 million by this year and then the panic if it doesn't happen sort of projections if you have a long-term belief in an asset?
Oh, that's a lot of questions wrapped up in one. I think that the sort of moon boy sort of targets that have to happen like now is more or less it's a result of our society. We're the sort of instant results now with little effort, passive income, blah, 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 do nothing, get a lot, which is just, you can't be like that in trading. If you want to learn trading, you really have to be willing to put in, probably thousands of hours in order to get like pretty damn good. And when I say pretty damn good, you're probably going to win like 60 to 70% of your trades if like you're really good, Now, of course, different strategies can come out with different ways as well. But, when it comes to psychology and people trying to learn to trade or learn to invest, which are, in my opinion, different things, yeah, absolutely. Patience for investing, obviously, and and having the convictions of your sort of fundamental thesis and analysis of whatever asset you're looking at. That's not my game. I don't really, do too much of that, even though I do, even though I do like Bitcoin, but I'm not the person to go to for that at all. For trading, however, people really don't like being wrong, right? It feels like we've lost something of ourselves when we're wrong. It feels like something within our being is now made unwhole, right? And so we're taught in Western society, especially, which is where I grew up, even though I live in Finland right now, we're taught like you go to school, you get the test, you get the right, you put the right answer or you're wrong. And that's how you get through life. Whereas trading, it's like, you have an idea, it's probably wrong. You better know when it's wrong and then switch your mind around, when that happens. So it really induces a lot of cognitive dissonance when you're trying to deal with that because we're just not brought up that way. And you're always kind of fighting that. No one likes being wrong, but it's just a facet of the reality of trading that you're naturally going to have to, go through something like that and then go through it over multiple iterations until you actually ingrain it in your soul. And then even then you still can't let go of the lesson. I mean, you kind of have to become it, to use a bad, just a bad saying right there.
Yeah, I always talk about the concept of planning your losses. Just really never even thinking about what's going to happen when you win. Yes, you set your target, of course, but just assume every trade is going to go against you and protect your capital accordingly.
Absolutely. And there's something to that as well. Like if you really are going to get into the nitty gritty of trading, you need to have a self-defined plan. It can be based off of whatever, but ideally this plan comes with 3 basic things: entry, exit, and profit taking. Whatever you do on top of that, that's great. But at the very basic, it needs to be that. And then once you have that, you need to go and back test that. And when you back test that, I don't mean just like, go over the last 10 times. I mean, the more is the better, like 50, 100, 200, 1,000 times, whatever it might be. Also see it in real time, because a lot of the times, things are going to operate kind of differently when you actually see it in front of yourself. But you should naturally have, with that information and that self-defined strategy, you should naturally have some sort of statistical analysis of whether that strategy is going to work or not. And, then you should naturally know, oh, this strategy is, 60% of the time when I see this signal, good, 40% bad. So if I get a bad trade, if I take a loss, it's not the end of the world. It's baked within the strategy. I know it's going to happen. And a lot of the time most people can put together a pretty decent trading plan, or at least a workable one, with relatively little trading. But the problem is they get in their own way. And I've definitely done this myself as well. I mean, I went broke one time doing that. And, it's not fun. I can tell you that definitely. And so the way that you get around that is just by being adherent to that. But it's so difficult in the moment for a lot of people. And again, I include myself in this, to just follow that, because there's some weird like emotional disconnect that we have. I don't know why that happens. We all think that we are logical, but when it comes to trading, you find out very quickly we're not.
Yeah, you move your stop loss. Oh, I put it in the wrong spot. It's going to bounce right at my stop loss. I'm going to be the whale's liquidity. And then, of course, you move your stop loss and it fires down and you become a passionate community member for the next 5 years. but everybody's been there,
Right.
right? And so
Yeah.
it's as you said, creating a plan is the easy part, and you can use it. I mean, you can create that based on tea leaves or unicorn dust or technical analysis or whatever you want.
Moon phases too,
It's
man.
following it.
Working.
It's following it that's hard, right? It's actually stepping away once you've entered a trade and understanding that your best instincts were the ones when you
Right.
took the trade and not when the trade was going against you. It's so hard not to move a stop loss. But I can say that after my 10,000 hours or whatever it is, that I'm more probably emotional about a Mario Kart game with my 6-year-old daughter than I am about losing a lot of money on a trade.
I've literally
really
said the same thing. You know,
really does
express
take a
your
very
find
long
another
time
way
to
to
get
express
there.
your emotions. You know,
Yeah.
we have gym, we have going for a walk, try a meditation, play a damn video game, whatever you need to do. You know, all these things, as long as you can just calm your damn mind, that's usually the state that you want to be in. You want to be maybe, I typically say bored. You want to be bored, but it's not necessarily bored. You want to be relaxed. You don't want to let your emotions get in the way and influence any decision that will take you away from your self-defined plan, because that's when, you know, things go tits up.
Yeah, absolutely. I mean, they say that, you know, it should be about as exciting as watching paint dry. And if you want excitement, go to Vegas. Another famous quote about trading. So I'm curious, after all of your hours, are there core sort of tenets or pillars of your risk management strategy that you find have really helped you to eliminate those major losses and capture more upside on a trade?
Yeah, absolutely. So, okay, there's a couple things that you can actually apply, you know, right now. And going back to that plan that I kind of just alluded to, there always needs to be a risk management component. Now, we typically forget about that, but they're all equally as important. But when we focus on the risk management specifically, as you asked, there always needs to be some criteria that is very easily verifiable. I'm talking about, you know, hey, price goes lower than this level, I'm getting out here, and that needs to be done. What I do in my own plan is I have like an ideal risk management area, which I typically manage off of, you know, maybe like an indicator flashes a signal, or maybe price action closes below a certain area. And then I have what I call like emergency, you know, stop loss, which is, you know, typically something that I'll put, you know, below like a very, you know, somewhere around like a major pivot on price action, typically going to include more risk. But this is like, okay, something has gone terribly wrong. I need to get the hell out because it's going to go more wrong if it goes below this region or above this region, whatever it might be. And, you know, at the end of the day, if you can just take yourself out of a bad trade, that allows you the opportunity to get into a good trade later, you know, something that actually fits your criteria. And that's really where trading is kind of different than gambling, because trading, I mean, they're very similar in a lot of ways, but trading, it's kind of like, I like to make the allegory of like poker, right? Poker, you have to play the hand that you're dealt. You have to. You're either in or you're out. It's good or it's bad. With trading, you can wait and wait and wait until you get the perfect hand that you want. And while we don't necessarily like waiting, that can, and a lot of the times will, just allow you to kind of free yourself to look for the very easy trades. And yeah, they might not happen all that often, but do they need to happen all that often? If, you know, if you're trading an asset like this, that's incredibly volatile and very generous. I would argue no.
So true. People always talk about the basics of risk management, like use a stop loss, don't risk more than 1 to 2% of your portfolio. But knowing when to be in the market and when to sit on your hands, to me, is the greatest piece of risk management probably that there is.
Oh, absolutely. I mean, it's probably more important to know when you shouldn't do something than when you should.
Yeah, people being out of the market or no trade is a trade in itself,
Absolutely.
right? It's making a conscious decision not to be in a trade is a
Sometimes
risk
it's the
management
best
strategy.
trade too.
Yeah, and protecting your downside. So I'm curious, is Bitcoin the only thing in the crypto market that you trade, or do you trade others?
I'll look at Ethereum every once in a while. The liquidity is pretty good now. It moves a lot, but it kind of scares me sometimes. Like it moves even more than Bitcoin, and Bitcoin's already just a beast of an asset. Other than that, though, I don't touch any altcoins. You know, I look at them on my channel quite often, but just as like a voyeur from afar, I want nothing to do with most of them. You know, are they tradable? Yes, absolutely. But I also don't want to go through like the whole rigmarole of figuring out whether it's like a legitimate project or not, of which, you know, there's more and more now compared to like 2017, 2018. But that's kind of where I come from as well, where, you know, a few years back is like everything but Bitcoin and maybe Ethereum are probably just, you know, scams.
Are you trading outside of this market?
No, I haven't traded traditional markets, or I do trade Forex a little bit here and there, but I haven't traded traditional markets since I gave up my badge in like 2018, 2019.
Same. So you're a Bitcoin trader. I mean,
You could say that.
that's what you're
Sounds
trading.
weird,
Yeah.
but you could certainly say that. Yeah.
Okay, so we talked about Moon Boy targets like $1 million and saying how kind of absurd it is to say it for a year. But do you think that things like that potentially could happen in the future? If we're talking decades down the road and you're looking at it as an investor, do you think that this asset could really reach those sort of targets?
I mean, of course, anything's possible, right? Let's say what sort of environment would require Bitcoin to get to 1 million? Well, first off, let's kind of think about where we're at right now. Bitcoin's about $1 trillion asset, right? Let's compare it to gold, which typically gets compared to, which I believe is like 9 or 10 trillion. And gold isn't really used for a whole hell of a lot as well. But, we do certainly have a path forwards to, some of those crazier numbers, because just fulfilling what gold is acting as now, which I think Bitcoin is probably a better alternative, definitely makes more sense to the younger generations as well. That's rather reasonable, and probably even more on top of that as well. I mean, we even see countries like using it as currency, I suppose. Right, yeah. Kind of crazy. But when you talk about 1 million, then we start to get into a different sort of territory, because it would probably imply that something terribly wrong has happened within the world. And while it's definitely possible, and maybe, and probably even probable in some scenarios, some doomsday scenarios, I'm not sure I'd want to live in that world, because
I talk about that too.
Probably World War III happened or something, and you don't want to be the only person surviving in an apocalypse,
Yeah, I always think about like Mad Max dystopian future. Like, yeah, I've got my Bitcoin and I'm taking it over to Gastown with my security because in my armed semi rig from the 1940s. Yeah,
exactly.
I guess I could tend to agree with that. I mean, if gold has an 11 trillion market cap, let's call Bitcoin a trillion, even though it's not. 11x from here is 500 grand. So
that's
something
pretty
like
good.
that.
I'm good with that.
I'd be pretty happy with that. Like, if it doesn't get to 1 million, I'm not gonna be too upset. So that is a really interesting way to think about it, I think, because at those certain price targets, you have to start thinking about a real fundamental change in the world as we see it.
Right. Possible, yes. I mean, maybe Bitcoin, I don't know, becomes like just a balance sheet asset, a treasury asset, and basically everywhere around the world. I mean, that's possible, I suppose. Maybe a few years off, definitely. But I certainly, if anyone's listening right now, hopefully I don't get misheard here. This would have to be like way far in the future, not anytime soon. If we're talking like 20, 30, 40 years, probably dead by then, if it's me.
So do you think the 6-figure Bitcoin is a reasonable possibility?
Yeah, I do think so. I mean, again, just going back to the analysis in comparison with gold, as we saw earlier, if this bull market does want to continue on, $100,000 is actually a somewhat relatable and reasonable target. That maybe could even happen in the next year and a half, I suppose.
2.5x from 40.
Yeah,
I mean, it's nothing for Bitcoin,
Yeah, I mean, and there's still a lot of, things that could happen on behind the scenes. Perhaps another South American country picks it up, or an African country. Also an ETF that's definitely looming. I think it's certainly possible this year. Still, I'd say extremely likely next year. All of this, all of the things that we've seen regarding exchanges recently kind of lead me to believe that, because it's very clear that all of the wild west crypto exchanges are getting washed out. You see it with Binance, see it with FTX, see it with, BitMEX certainly got theirs. I don't think Bybit's been targeted yet, but all of these exchanges have essentially decided to either do KYC or kind of stop doing
and reduce their leverage. Yeah,
right,
reduce their leverage.
Yes. Absolutely. And so that kind of tells me that we're preparing the sort of infrastructure for, a more combined effort with traditional markets, which I think is a good thing. I'd rather trade this on like CME than like BitMEX or something.
Sure. Makes complete sense. So where can everybody follow you, follow your analysis, check out your channel after this?
Yeah, man. So we do live streams every day, every weekday, that is, at Crown's Crypto Cave on YouTube. We also have the Crown Trading app, which is free to everyone. We offer up, I suppose, the most free quant data across the lands. So those are my 2 biggest socials, and hopefully we can convene soon.
Awesome, man. Well, thank you so much for taking the time. I love the analysis. Extremely, extremely thorough. Much better than my few lines on a chart, and hope the best.
Those logical lines.
Thanks, man. We'll definitely revisit this soon when we're at $1 million.
Sounds
okay,
good,
it won't
brother.
be soon. I got it. Okay, not soon. Thanks.